In today's news, we're going to be reviewing a central banker who says cryptocurrencies are failing us, and he gives several reasons why. Well, in today's show, we're going to be going over the headlines and see if the facts of today are supporting his story. Let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together we are Minting Coins, your trusted source for crypto news, interviews, and ICO reviews. Thank you for showing up. Hit that like button. It really supports us and it helps other people find this content. Also, if you have any questions or comments, leave those in the comments box below so your voice is heard as part of the community. In today's show, we're going to be going over a lot of different headlines, really talking about what's happening across the world as it relates to Bitcoin and cryptocurrency. But we're going to be starting off by taking a peek to see the traditional lines that we're hearing from the bankers in the banking system of why Bitcoin and the Bitcoin token, Ether, decentralized public ledgers are not going to be successful for the future, at least in terms of their perspective and their viewpoints. But where the world is going, where this technology is being developed to, really fits outside of the box of what these traditional bankers, traditional financial institutions, traditional regulators have really been accustomed to. Yet with the transition of the news, with the transition of the markets, with the transition of the technology, what we're seeing is more people, more companies, more corporations, more governments who are getting on board to understand the cryptocurrency, understand Bitcoin, and to, at some level, some degrees, to different levels and different degrees, allowing people to participate in this market. So when there's going to be some people participating over there and other people over here are not going to be participating, it's going to create a huge discrepancy between what different groups of people have, and people will see that, people will recognize that, and then not everyone will be happy. So it's going to be really interesting to see how regulators attack this problem in different parts of the world more harshly as the people of those areas see other regulators which are opening up the benefits, opening up the opportunities for people who are in different parts of the world. Well, with that being said, let's take a peek at the news, take a look around these headlines, and then let's discuss. So starting over here at bitcoinist.com, we have cryptocurrencies are failing by the UK's central banker. And so this is the Canadian economist Mark Carney, who also serves as the Bank of England and chairman of the G20's Financial Stability Board, has called for greater regulation against the anarchy of cryptocurrencies. And so real quick, what does he say? He says that cryptocurrencies are a poor store of value. He says that cryptocurrencies have exhibited all the classic hallmarks of bubbles. And he says that a better path forward would be to regulate the elements of the cryptocurrency ecosystem to be better in his view, to fit the world in his view, and to help the businesses and the banks that are already existing to keep the status quo moving forward. But what he seems to forget, what a lot of bankers seem to forget, what we have a hard time forgetting, is the situation of the world in 2008 to 2010, 2012, with the fiasco from the housing market crisis. And so this was Carney's financial system. It wasn't particularly safe and sound during all the times of 2008 financial crisis, and all the people who lost their homes and their jobs during that time, who ultimately saw many of the traditional financial institutions rewarded for actually failing, rewarded for doing what was wrong, being rewarded for, in some cases, committing fraud and really going against the best interests of the people who, whose money that they were there to protect. And from what happened in 2008 and 2009 and 2010, we have the birth and growth of the Bitcoin blockchain and Bitcoin itself, which is, as we have already seen, being massively disruptive to the current world of economics, finance, technology, and cross-border relationships between people. So here's a tweet over at Twitter from Bloomberg. Cryptocurrencies are failing in their role of money, says Mark Carney's speech at Bloomberg. Well, money is also failing at the role of money. Bitcoin has really provided a lot of stability for a lot of people across the world. It's really interesting to see the perspectives from the prism that we're sitting in. Let it be that we really believe that, or it's just our job to say that because of the position of power that we have. But is this true? Has cryptocurrency failed people? Has cryptocurrency failed corporations and governments? Is it a worse store of value? Is it riskier for people to use? Is it a bubble and people need to be completely worried? And could you say the exact same things about cash, about fiat cash, about USD? Well, there's a lot of things happening across the world. For example, we have Mexican lawmakers who are passing cryptocurrency regulation to allow more people in those countries to participate in cryptocurrency and Bitcoin and different blockchain technologies like that. In Africa, we see Bitcoin adoption soaring because of the increasingly high volatility of fiat currencies across all of Africa. We have the very large, very well-known Liechtenstein Bank offering direct cryptocurrency investments in cold storage wallets. That's a big move from a big bank, allowing people to hold and to manage their cryptocurrencies. We have new changes in Germany where they're not going to tax you for buying coffee with your Bitcoin. So for tax purposes, this means that converting Bitcoin into fiat currency or vice versa is a taxable miscellaneous benefit. But when a buyer of goods pays with Bitcoin, an article of the EU's VAT directive will be applied at the price of the Bitcoin at the time of the transaction. And so they're not going to have a taxable miscellaneous benefit tax in Germany, but they are going to have the VAT tax applied. And so there's going to be all the benefits of that going into the economy, going into the government, and encouraging the spending of money inside those economies instead of restricting people's ability to spend it and then forcing people to hodl it more instead of actually being part of the economy. So in terms of the blockchain technology adoption, we have Credit Suisse, who is a banking giant and has sent over $30 million over a blockchain-powered platform. It said it completed the live securities lending transaction with Dutch bank ING, and this has been built on R3's Corda distributed ledger platform. What they're saying is that the success of this first live transaction speaks to the potential for blockchain technology to help improve collateral fluidity by creating a more efficient, transparent, and cost-effective marketplace for liquidity transfers. This is where we're seeing the adoption of blockchain technology. This is where we're seeing this technology being taken up and taken over by these very large players in the space. And while they're thinking that to some degree that they can separate the technology from the Bitcoin, what's going to happen, in our opinion, as we move forward is that the more decentralized this technology is, the more open source this technology is, the more likely they're going to move over to the open source decentralized technology. And so these distributed ledger systems, while they're paving the way for blockchain adoption to be taken in without having to accept the Bitcoin token itself, nevertheless, it's still clearing the way for the Bitcoin token, for the Ethereum token, known as Ether, to be more widely adopted in these systems moving forward. I think it's important to note that these systems are also allowing these traditional financial organizations, these traditional businesses to survive a little bit longer. It allows them to remain competitive using blockchain technology to A, increase the efficiency, which decreases the cost, and then B, to increase the transaction time, which increases the fluidity, it increases the volatility, it increases how many transactions can happen in the same period of time, which effectively creates more money by allowing more money to pass through their systems, through their platform. So this is allowing them to be more competitive, to last a little bit longer as blockchain technology just encompasses over each of their business models. And so it's going to be really interesting to see how long these two worlds can be completely separated before there's major disruption, not just 3 years and 4 years and 5 years down the line, but we're also talking 5 years, 10 years, 15 years. A lot of people were looking at the internet in the 70s and the 80s and the 90s, and even in the late 90s, I don't think people really could have predicted fully where we were going in terms of Internet 2.0, social media, virtual reality, augmented reality. It's definitely a brave new world, and what we have here with this technology is decentralized trust, distributed trust, which directly competes with security companies, information companies, financial companies. And we see the blockchain technology adoption just increasing at this exponential rate. And while a lot of people keep the Bitcoin separate, we just don't think it's going to stay separate moving forward. So what else do we have going on here? We have HSBC, who's planning a pilot program on blockchain-based payment systems. And they mention here, going from the proof of concept in 2016, they're now at the tipping point of getting actual customers involved in live transactions in the coming weeks and the coming months. And so this technology from HSBC has come a long way. And what they're saying here is that they're much more comfortable with its security and with its scalability. They go on to say that they see this developing through the year so that in 2019, around the same time, that they should be in a position to have both the network of banks, the corporates, and others, and the app ready to use on a wider scale. So that's 2019 moving into 2020. And don't forget, in the summer of 2020 is when we have the Bitcoin halving coming up. Everybody is aware of this. Everybody is recognizing this. And it's definitely going to be a mad dash for people to look at Bitcoin, and it's going to be really interesting to see what effect that has on a Bitcoin price, as everyone is aware that the amount of new Bitcoin is about to get cut in half in just 2.5 years away. Also in Japan, we have Bitcoin fueling investment. We have Bitcoin and solar energy both fueling investment in Japan. And what's interesting inside this article is that it notes that Japan currently ranks as the largest Bitcoin market, with a share of over 61% of global trade volume and 2.7% of their population holding BTC. We know Bitcoin is legal for all merchants to accept in Japan, and we know that people in Japan are super excited about digital payments, about technology, and they seem to recognize the benefits and the power of this more than the average country around the world. And just to finish going around the world here, we have 1,200 Australian newsstands who are now selling Bitcoin and Ethereum. This is a lot of places across Australia where people are able to see Bitcoin, buy Bitcoin, sell Bitcoin to get access to this new cryptocurrency. And so all over the world, from Canada to Europe, and Europe through Asia, Asia to Australia, and then back around into America again, we have a lot of places that are looking at Bitcoin and are increasing its awareness and its adoption. Over in Israel, we have a ruling from their high court that could spark Israel into Bitcoin mania. So what happened over there is that their Supreme Court ruled last week that one of the country's largest banks could not shutter a digital currency broker's bank account until a public regulatory review can be completed. And so this might cause a lot of people into Bitcoin from Israel who may be clamoring to get their hands on some of this technology, some of these tokens, before they may be facing regulation that says banks are going to be able to shut out people in their country as well for whatever excuses and reasons that they want to come up with. And before we wrap this up, let's go back to see what some more bankers say. JP Morgan Chase, Jamie Dimon, I forget, is he pro-Bitcoin or anti-Bitcoin? Let's see what JP Morgan says. Unlocking economic advantage with blockchain, a guide for asset managers. Seems really bullish for this jpmorgan.com website. Has anybody heard of this? JP Morgan Chase & Co., jpmorgan.com, unlocking economic advantage with blockchain. Seems really bullish. Seems as if this is some serious information where they're going to be helping asset managers understand the potential of blockchain. I wonder if these asset managers are going to realize that Bitcoin is a blockchain, and Bitcoin is also a token that's highly connected to the economic advantages of blockchain. But let's do more than just read the headlines. Let's get a little bit into the article, into this report. There's a growing realization that distributed ledger technology, popularly known as blockchain, will bring a radical shift in the way that we think about financial assets and the way that the financial industry will operate in the future. Wow. As said by this report from JP Morgan Chase. They go on to say that the blockchain journey is likely to be long and the outcome is uncertain, but a consensus is forming that it is the real deal. Disregarding it is a risk. So there you have it. They have this report. They are arguing that asset managers need to get off the sidelines, that they need to take initiative, and they need to understand and embrace blockchain. And so this report is going on to help them understand where this may go and actions that they can take to get involved. So this is right from the proverbial horse's mouth, right from JP Morgan, where they're telling their asset managers where to go, and they probably have infrastructure that are going to conveniently support those asset managers. Is it because they have been creating this infrastructure just recently this year, or have the banks and bankers and regulators been working on this since 2011? We know it's because they have been working on this since 2011, and we know that they know that blockchain is going to be taking over the world. We know that blockchain is a big deal. It's a big, big deal. And the 1% that we look at Bitcoin, the 1% that we look at blockchain technology, could be the 1% that we lose, or it could be the 1% that radically changes our life. This is the cusp of a revolution in not just technology, but the way the world interacts with each other, the way the world communicates with each other. And most importantly, this is a radical, revolutionary change in the way that the world trusts each other. Before we had blockchain technology, we relied on the media, we relied on governments, we relied on all sorts of centralized organizations that were subject to corruption, that were subject to inadequate management, inadequate funding of resources. And now we have this global distributed ledger, systems of accounting, systems of smart contracts, systems of privacy that allow people to interact with each other ways that we've never been able to before. And if you think the internet is similar to that, the internet never provided us security. The internet never provided us with trust. The internet provided us with connection and communication, which is really awesome and has done wonders for the world. But blockchain technology is the next step. How do you know you can trust that information? How do you know that what you're reading is real? How do you know that there is not some sort of attack in the privacy in the middle? Blockchain technology is solving these solutions by making systems faster, by making systems more efficient, and these systems want to get taken over by the existing power infrastructure. So what we've been seeing over the past year is the existing power infrastructure fight against Bitcoin. They have been fighting against even the word blockchain technology, instead choosing to use the phrase distributed ledger technology. Distributed ledger technology is typically centralized under one organization or a couple organizations. True blockchain technology is truly open source. It's a network that anyone can participate in. It's a network that anyone can look at the code, can review the code, can enhance the code, and it's a network that doesn't require any one person, institution for it to continue working moving forward. It's just amazing to see how many people go against their best interests. It's amazing to see how many corporations and companies are fighting to hold on to what they have had. And now I think it's really interesting to see this pivot from them saying that Bitcoin and blockchain technology is a fraud and a Ponzi scheme and a scam, and seeing them pivot to the acceptance of the technology. And it won't be too long before we hear them say that they thought this was a good idea from the very beginning, and maybe they'll even claim that it was their idea as well. To be seen, to be continued. I'd love to know what you think. Do you think Bitcoin and cryptocurrency has failed us? Do you think that the banks are going to pick us all up like white knights in shining armor and come to our rescues against the Bitcoin that it's burned so many people? Let me know what you think in the show notes below. And just thank you for showing up. Thank you for being here. Thanks for sharing this information and learning about this information with us. Until next time, I'm glad that together we are minting coins.